Today we are going to be doing technical analysis on the S&P 500 for Monday, July 19th, 2021. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I'm a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. So the first chart that we're going to look at is a 1-day, 1-minute candlestick chart of the S&P 500. So each candle on this chart does represent 1 minute of trading. So this is just today, Monday, July 19th. Of course, we were down 1.59% at the end of the day, but we had a very nice little move here over the last 45 minutes, starting really 40 to 45 minutes. That helped alleviate some of the pressure. We were down well over 2% on the S&P 500 earlier this afternoon, as you see right in here. So moving back over to the left, we opened up negative and the market just continued to sell off throughout the day. And we found some footing right around this 42.34 level, as you can see right here. Kind of that acted as a floor on these 1 minute candles today. So we'll have to see if this 42.34 level holds up over the next few days. But the fact that we saw this over the course of over an hour, about an hour and 15 minutes, from about 1:30 until 2:45 Eastern time, you can see that we did not have any closes, 1 minute closes below that 42.34 level on the S&P 500. So that gives us a clue that that could be a very important level going forward. The next chart that we're going to look at is an hourly candlestick chart of the S&P 500 that covers this last month. This blue line is the trend line that had been in place from June 18th, when we had a short-term bottom on the S&P 500, and then we broke beneath the trend line and closed beneath it on Friday the 16th. So this trend line shows where this trend was operating. Of course, we had this pullback on the 8th to that level, and then bounced off of that trend line, went higher, only to roll over this last week and close beneath the trend line on Friday the 16th. And then, of course, we had some follow through today to the downside. So, the good news is we had this rally right towards the end of the day. You can see a pretty strong candle here with some nice volume on that last hour of trading on the S&P 500. So, we'll just have to see, was today a one-off where, we had just enough pressure relieved on the S&P 500 over today and the tail end of last week. The selling really started on Wednesday of last week, and if you want to see that, make sure you take a look at the video that I produced over the weekend. But we've had selling for the last 4 days now. So was this enough to relieve enough pressure off the S&P 500 to allow us to move forward or not? Only time will tell. The next chart that we're going to look at is a daily candlestick chart of the S&P 500 that covers the calendar year of 2021. Of course, you can see today, again, down 1.59% on Monday, July 19th, 2021. And you can see on this candle, we pulled right down to the 50-day moving average and closed above it. The 50 is setting at 42.4031. That's where the 50-day moving average closed. And the S&P 500 closed at 42.5849. So again, 42.4031 is where the 50-day moving average is setting right now on the S&P 500. And you can clearly see that the tail of this candle, it's kind of hard to see. Hopefully you're looking at this on a larger screen, but the tail of the candle did intraday dip below that green line, that 50-day moving average line. But the good news is that the S&P 500 closed above that. So, we'll just have to see over the next day or two, can we stay above the 50-day moving average? If so, perhaps this pullback was very similar to the other pullbacks we've seen throughout 2021. And you can see the verbiage I have here. The S&P 500 has obeyed its 50-day moving average throughout 2021 so far, and there's only been 4 one-day closes, right? 1, 2, 3, 4. There's only been 4 one-day closes below the 50-day moving average in 2021. So it's just been absolutely incredible. And we haven't had any 2-day in a row closes beneath the 50, right? It's just been one day and then back up above it. One day, back up above it. The closest we came was right here. We had this little cluster right here where we closed below it, went back above it, and then barely right here in March closed beneath the 50 and then had a very nice run and didn't close below the 50-day moving average until June right here. So we pulled right down to the 50-day moving average. Maybe we can bounce off of that and continue higher. But there has been a lot of weakness in the markets over the last few months, especially in small and mid caps. So, it's possible, and especially with the fact that we're now in the seasonally weak part of the year, at least getting close to it. August, September, October, traditionally, not every year, but traditionally are the worst 3 months of the year for the stock market. So, if we're going to get a pullback that's more serious, right, other than just a one-day pullback to or below the 50-day moving average, like we've seen so far for calendar year 2021. If we're going to get a pullback like that, guys, it would make sense that it is going to happen somewhere in this time period, right, from now through, say, to the middle to the end of October. So seasonally, it would just make sense. This blue line down here, that is the 200-day moving average. So if we are on our way down to the 200-day moving average, that takes us down to about 3,900 on the S&P 500. So if you are sensitive to losses, perhaps you want to lock in some gains that you've made this year, rebalance portfolios, things like that. Also, and I want to make sure I mention this, if you are a Simple Market Signals subscriber, I did send out an email to you this morning at about 10. The timestamp was 10:15, but by the time the email went out, it went out right around 10:20, 10:25. So if you are a Simple Market Signal subscriber, make sure you check out that email I sent this morning before 10:30. And then I did get a call from one of my subscribers just before making this video, and he let me know that he didn't see the email. He called to see if there was any changes to my model, and I did confirm that with him, and I resent the email right here at the close of the market. So if you are a Simple Market Signal subscriber, make sure you check your email. I sent the same thing twice, so you'll have that. Guys, if you're not yet a Simple Market Signal subscriber, what are you waiting for? I mean, seriously, guys, this is so cost effective. And, with that said, pay attention to the balance of this video here, and, you owe it to yourself, right, to spend a few minutes looking at what I do, because for the right people, this can make a huge difference in your trading and investing, whether you're an individual investor or a financial advisor. And I know this is true because I get people calling me all the time and thanking me for what I do. Okay, these are paid subscribers, paying subscribers, right? They're paying me, and they're still calling me to thank me for what I do because it's helping them so much. So that right there is proof positive that, that people really are benefiting from their subscription to Simple Market Signal. So I hope you guys enjoyed this. Again, this was one of the worst days we've seen in the market for a while, so I wanted to do this video on Monday. Lately, as you know, I've only been doing the weekly updates, but on a day like this, I want to make sure I get some information out there for you guys to take a look at. Please make sure you check out the balance of this video before clicking away. Thank you so much. I'll see you in the next video. Would you like the advantage of knowing when it's generally safest and most profitable to be in equities, and when it's most dangerous and generally least profitable to be in equities? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Want more charts? Want access to proprietary market information? Want to minimize the likelihood you will experience catastrophic losses in the market? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com, and I will also leave a link to this site in the description box below this video.